you'll always have the tension of a big corporate trying to make money and a regulator trying to regulate it.
1, 2, 3, 4.
Welcome to those of you who are listening to our podcast, Sense of Identity. As those of you who've maybe listened before or newcomers, Sense of Identity is about us talking to interesting people doing interesting stuff around the sphere of our endeavours in the market. We like to try and focus around things that are very topical, current, ideally that connected with risk. So I'm really pleased and delighted that we were able to encourage Mark Venslovic and John Carr from RiskPod to join us today. So thanks, guys, firstly, for joining us.
Well, it's nice to see you.
Thanks so much for having us. Thank you. Sorry, obviously my reception just dipped out at the opportune moment. Sorry about that.
It does give me a chance to introduce the fact that, John and Mark's business is global, has a geography which is broader than the UK. Mark's joining us from Dubai today. So if you see him with beads of sweat when we start talking about the subject, it's not just about the subject, it's just the sheer heat out there. But so thanks for joining us. Just to sort of try and introduce things, and then as normal, we're going to free flow. I mean, for me, when we first started chatting about what you're up to, guys, and I'll give it my brief description, and if I can, really this is about you and what you do in the market. I was just fascinated. We've probably, as consumers, all of us in one way or another, been touched by some of the mis-selling scandals of the past, whether that was PPI or endowments and some of the big numbers that are associated with what they call remediation processes. And again, my words, the assessment of errors that were made and putting those errors right in a way that to move forward. But the scale of these things is huge, and the companies that are trying to deal with them deal with an onslaught of volume in relation to whichever subject it is they're trying to remediate. And from my understanding, RiskPod is all about trying to join the dots in a technical solution that helps streamline those processes and brings the right resource to bear at the right time with the right expertise, which is not an easy thing to do. So subject to remediation, I'm pretty sure one way or another, people that are listening to us would have touched in that. But maybe where we can start, if it's okay, John or Mark, perhaps you could give us, your words as to what it is RiskPod's trying to set out to do and do differently, and covering some of those bases if we can.
Yeah, well, thanks for the warm intro, and look, it's been a pleasure getting to know you guys. We're really thrilled to be on the podcast, so thanks for inviting us, and I think there's lots of exciting things to come. I'll leave the risk-based detail to John as our Chief Risk Officer, but ostensibly what we're trying to do is solve a global growing problem. Regulated firms face increasing regulatory scrutiny and have a lot of work to do, not just in terms of keeping up with the changes, but reviewing, refreshing and remediating their portfolios, whether that's an event-driven circumstance, if the regulators told them to, basically, or they're doing really well. There's a huge amount of clients on their books where they have a fiduciary responsibility to review or refresh those files to ensure that they're operating in a regulatory fashion. Typically takes a lot of time, right? Number one, it takes a lot of time, and we'll probably get to AI and data and all that kind of stuff. Risk is a human decision. There's no regulator that's run by a robot yet, as far as I'm concerned or aware of. And as such, it's people with the right expertise who keep clients out of the firing line. So if you think of what we do for major organizations, whether it's a bank, whether it's a neobank, an offshore law firm, a fiduciary, a crypto asset firm, payments, they all have clients who they have to onboard. And they have to monitor either the transactions or the activities of the people that they're working with. There is a consistent, constant need to ensure that those people are whom they say they are, and that the transactions they're doing are suitably appropriate under the regulatory guidelines. We have built ostensibly a marketplace where, led by my esteemed colleague John, we aim to get the world's leading contractors and or advisory professionals in the KYC, AML, regulatory and transaction monitoring space into our firms to solve acute or broad needs very quickly. We are able to scale up based on the platform we are building. We're not quite there yet, so I shan't overpromise what we're doing right now, but we can build teams of significant size in days rather than weeks, months or longer. The relevant expertise to go in and solve problems very quickly under the expert guidance of John, the Chief Risk Officers and the experts that we utilise.
And Mark, typically, have you found, history seems to spell this out anyway, but in a lot of cases, these problems arise very fast, and that's what you're called to do. A lot of the companies you deal with are suddenly moving into panic mode. How do we resource this? How do we deal with this problem?
Yeah, I think I'll probably hand over to John for the better part of that question. But it's all of those things and everything in between. You could have an SHIT moment. We haven't done X. We have just found in our portfolio X amount of issues that we need to remediate very quickly. It could be something that's not been at the forefront of the attention because it's not been deemed as high risk, but it's built up to a point where it's touching red from amber. But I'll let John elaborate on some of the examples of the requirements that regulated firms have.
Yeah, hi, Paul. So, there's two areas in which we typically get engaged. One, as Mark said, is a lot of clients, or not a lot, some clients will have a regulator's visit. And upon that visit, where the regulator may look in their portfolio just to ensure that they're happy that the firm are managing their risks and compliance behavior appropriately, might notice that there's an issue that they're concerned with. And they then typically give the firm a period of time to correct the issue that's been highlighted. Now, of course, firms, I would say, are not awash with risk and compliance personnel twiddling their thumbs, waiting for work to come in. So typically when something like that happens, the firm will say, we don't have enough people to solve the problem. We've probably only got enough people to do BAU.
Yeah.
So where do we go and find people with the right expertise and knowledge and experience to help us do what we need to do?
Yeah.
That's why we created the RiskPod for that bit. Then you've got actually a lot of firms, and it's not only, a lot of people think only like the fintechs would have these sort of problems where firms will just, they're constantly obviously growing and increasing their portfolio and client base. But what a lot of firms are not doing is they're not reflecting the staffing requirements in the back office to help with that onboarding and that ongoing management of those customers. So you typically get times where you get sort of big peaks of human need to actually help keep the business within its risk appetite, making sure it's compliant, making sure it's doing everything it should.
Yeah.
And firms don't want to have to spend that sort of money to have maybe what you should probably have is maybe, 15, 20, 30 people in risk. They may only have 5 or 10.
Right.
So a lot of firms will then say, well, look, let's get some short-term help. Let's see if we can get people to help us, get us back on an even keel where maybe our KPIs are not really gone from amber to red or not gone from green to amber. We're still in a place where we feel like we can manage the business ourselves. And again, that's how they engage the RiskPod.
And typically for you, with that, I appreciate you, it feels like I should use the words, you could get parachuted in, you might be called upon to try and out resource up, get the right skill base, the right focus. It seems sensible that even when you get through a program which might involve this sort of sub-resource boost, that you then help manage thereafter. Is that also part of what you do often to sort of help people,
Yeah, well, so I've worked in industry for many years. I've been in banking since I was the age of 16, and I'm a little bit older than that now. So I've been in risk and compliance for quite some time. And one of the main reasons that we have around why we created the RiskPod was because I had some pretty negative and poor experiences in industry with consultants and with firms where I was spending hundreds of thousands of pounds a month on remediation projects because I was just like what I referred to earlier. I was in a business where I didn't want to spend huge sums of money on the back office, even though I knew I had to or I should. I didn't because it was affecting sort of profit lines. So I typically engage with consultants and contractors to help me get my portfolio back to a place that I was comfortable with, but also using those firms was one, hugely expensive and time consuming. But secondly, a really frustrating thing for me was these guys would walk out of the door. And as they were walking out of the door, I almost had that feeling in my head that they're saying, I'll see you again next year, John, because you're not going to change.
Yeah.
One of the things that we want to do at the RiskPod is I've got this big passion that I want to leave. I don't just want to leave a customer better than we found them. I want to give them ideas and hints and tips and even referrals to other people that can make their life easier. So I still don't come back next year.
Yeah.
I could earn significant sums of money doing this every year for people, but I feel like we've got a moral and professional obligation not to do that. I want to be able to say to a client, look, I'm here to help you with your problem. Are you open to having some feedback from us where we think you can actually make things a little bit easier on yourself in the future so you don't see me again next year?
The truth is, when I started looking at this subject, I was blown away actually, because I think we forget ourselves the topics that we've already all been involved in. It's not like this is going to go away because things change. So actually, it's a healthy way to leave someone in a healthy position, because the truth is there'll be a new topic and a new requirement. If they know they can come to a safe pair of hands, we've been through. Adam and I were chatting about this earlier when we were talking about PPI. There happens to be a firm quite close to us that have got a massive call centre that's set up around this. I'm sure they're not the only one. Mis-selling endowments years ago. I mean, but the numbers they're mind blowing. I think you looked some of them up, didn't you, Adam? On the PPI.
Yeah. Well, I mean, I think the PPI one was the biggest one we could find. It was approaching 40 billion apparently of compensation. So, and I guess that doesn't cover some of the operational costs of running the schemes either. So it's huge amounts. And then you've got the variable commission on the car finance piece, which is the one that's hot topic right now.
Looming,
yeah. And I think it's going to happen. It's just which who's the driver in the cases, whether it's the individual or the lender that has to.
I mean, we sadly live in an environment now where there's blame, there's a claim, right? We know that's the environment that financial services sadly is in since things like PPI, and there's been a number of those throughout the years. And I don't really want to be one of these ambulance chasers that goes from one place to another. Like I said, I've been in this industry now for 35, 36 years. It's been really good to me, and I've thoroughly enjoyed doing what I do. And actually, I almost feel like I've got that professional obligation to help the industry get better. Because as you said, Paul, this thing is cyclical. It goes around all the time. And sometimes it's really frustrating that you feel like people are not learning the lessons from 10, 15, 20 years ago. And whilst I can't change that, what I am trying to change is people's perception on how you can actually look at your problems in a different way. And rather than just spend good money after bad, find a different way of spending your money and making sure that you're not going to get in trouble with your board, let alone your regulator. The board are going to have something to say when they see all your key risk indicators being blown out of the water every month. It can't be very nice.
And I guess as the world shrinking, the needs for your services are very apparently non-geographically dependent, and regulation changes will mean that there's always going to be a place for your type services. So from what I understand, you've built yourselves a pool of resources, and you've effectively got yourselves your own private LinkedIn for compliance resources. And so you've got people that you've vetted, you understand what their skills are and where they can add value to particular problems, and you can bring those people in to help.
Yeah, and I'm we set up this system, and we got, I think it's about 90 odd data points now that we ask about every single person, and we ask a whole heap of other stuff to get people onto our marketplace of contractors. And the main thing for me is, as you said then, Adam, the world is actually a small place. So now I don't really care where you live. What I care about is, where is your experience from? So, you might have experience of the Dubai regulatory regimes, whichever one it is that you're in. But you may live in South Africa or Vietnam or the UK or the Netherlands. I don't really mind where you live. I care about your experience. Now, of course, when we present to our clients the solution that we believe is appropriate to them, if some of those people are not where the client is based, we'll tell them that, So, it's not as if I'm speaking to a UK client and I'm trying to just solve the problem from India or South Africa because I get a lot more value for money over there than I would typically in London or something like that. My job when I'm speaking to clients is not just understand the problem, is to understand the solution, but also understand the budget, the time frame, how they want to approach a solution that we're going to present them, and the complexity of the problem. If you've got a standard, I hate to say it like this, but a standard retail banking personal customer that requires a KYC remediation, that's generally a little bit easier than if you had an interest rate derivative customer that's an investment banking client in the Cayman Islands. Now, of course, I'm going to need to have a different skill set in order to satisfy those. And some of those people, I may only be able to get them with specific regulatory knowledge in the jurisdiction where the client operates. And the client might say, John, I don't really care where these people are, As long as they've got the skill and knowledge, you just tell me that they can do it. We manage it for them. And we've got project managers that manage these contractors that deliver this on a, well, I was going to say on a daily basis, but we probably do it on an hourly basis. Check-ins with them in the morning, check-ins in the afternoon. We're checking on productivity. We're making sure we're delivering everything that we said to the client we will deliver in the time frame we said we would deliver it.
I was actually thinking a minute ago as well. There was we've kept our IT tech sort of team internal. There's a certain piece of you a piece of me certainly that really likes the idea that actually, if you wanted to, that geographical reach suddenly gives you the ability to have a round-the-clock resource, doesn't it, to accelerate programs. So as opposed to being a bad point, it actually suddenly goes in your favour in a big way.
You then talk about outsourcing, which is obviously slightly different and slightly more complicated, but it just offers you far more flexibility. And one of the things, and to John's point, it's beholden upon us to have brilliant tech partners such as yourselves, who, when we identify a problem with a client, we say, you've got to speak to these people because we know this is going to fix your problem in the medium and long term, rather than just this remedial piece of work that we've got now. You must speak to these people. Don't bring us back next year. Respectfully, we don't want to see you next year to do the same thing. You know, it can get better. It will never go away, but there's everywhere for very specific and or broad problems.
And the other bit for me as well, we were chatting about this again, sort of separately after we caught up. We happened to be out with you and caught up with Mark in person, that was just fabulous. But the span of the topic of remediation, as consumers, PPI endowments, okay, we know all that bit, and then suddenly we've all seen this stuff about the car financing. I think they're muting, settlement numbers around 2 billion, and it's touching. I think was it Black Horse, Lloyd's Banking Group. I think one of the largest car fines providers, in the UK. But the subject goes beyond that into the pensions world. We work very closely with very valued clients in that pension world, and I know there's been also remediation requirements in that space potentially as well, as legislation changes and people are trying to ensure that people haven't suffered as a consequence of that stuff. This subject covers pretty well almost any topic, doesn't it, really? Absolutely. Largely financial services, I'm guessing.
I mean, one of the things I talked about when we talk about remediation, and I talk about this to a lot of people, and it's interesting that people get a bit frustrated with all these remediation projects across multiple parts of the industry. And I say to them that the thing to understand is it's the regulator's job to protect its consumers, to protect the people that use the services and the products of the financial services industry. So you will always have, I think, if you like, that tension, and sometimes it's healthy and sometimes it's unhealthy, but you'll always have the tension of a big corporate trying to make money and a regulator trying to regulate it.
Yeah.
And the regulator obviously has a view on how you are supposed to do that. Sometimes that doesn't always align with the corporates on how they feel that they should make money. Now, I'm not suggesting these firms go out intentionally trying to mislead people. These corporates try to create an environment for people to do business with them. And very rarely do these big corporates set up a way in which to do business for them using the lowest common denominator or the person with the least amount of knowledge and experience. Typically, these products are constructed by people that know what they're talking about. So they instantly think, well, if I know what I'm talking about, I'll just present it to a new customer in this way. But that customer wouldn't know what they're talking about. And that's how you get this constant wheel of remediation. It won't go away. It's never going to.
People and companies are smart, and the numbers are mind-boggling. I think KYC spend, depending on where you read, is roughly 11.5, 11.7 compound growth year on year. So if it's 6-7 billion this year, it's going to be double that in not that long. Banks alone were fined over 3 billion last year. You've got crypto firms; they've been marching up the charts in the terms of the fines that they get. And a typical regulated firm, and it will depend on the size and the complexity of the firm, it's between 28 and 57% of their spend is on risk and compliance related factors. It's huge. This is not a shrinking industry. People are getting very, very, very clever. We all, especially in Dubai, I get 3 phone calls a day from the police or somebody else who aren't the police, of course. They're trying to get my details and empty my bank account. So whilst this isn't necessarily exactly the space we're in, people are getting clever and creating new things all the time, where regulators need to be really sharp, and therefore clients need to be even sharper. and therefore they need to spend more, and that will proliferate from a kind of remediation and review perspective. There's only one way it's going.
And one of the other things that, again, when we sort of quizzing you about this, is I was intrigued how this operates at a customer, a user level. It sounded like the sort of pre-qualification of expertise, so making sure you're actually accessing the right consultant resource, which is going to maximize your spend as well, and the power of your spend. Is that filtering process is effectively what RiskPod is doing, pre-filtering.
So we've got, as John said, right now, we are our own client. We have built a proprietary system / platform for ourselves where we have X amount of data points, which we can extrapolate the right information out from. So if a client needs insurance people in Guernsey who've worked under the GFSC, we press a button ostensibly and we can see who has that experience. What we're trying to build as we invest more money in the platform, and it's not ready yet and won't be for a little while, but we will offer this platform out to people so they can self-serve ostensibly if they need to search support. We will still offer managed and outsourced services, but we're getting to the point where the need is so great that people need people so quickly. Right, we've got to have someone who's got, let's take the retail banking experience, FCA and retail banking experience. They can go and click a button with the salary that they've got. All the people that we've got have been very heavily vetted, checked, and everything else. It's no mistake getting into the RiskPod, that's for sure. Very high barrier to entry. So there's then a level of security that the people they've got can get up to speed very quickly and be surgical in the requirement that they're in to complete. The test for us is John and his team make sure that only the strongest people who have done it can do it and will do it get access, I guess. It's a high barrier to entry.
And I guess that's one end of the scale in terms of, it goes right the way through to, excuse my phrase, grunt, hands-on people that can go through this stuff. Because when you're talking about the sort of into billions of numbers and the number of people that are involved here, I was trying to dig around a bit, sort of bringing this back to sort of consumer world as well. When it starts to resonate for you personally, doesn't it? A few people I suspect haven't bought a car under finance at some point in the last few years or 10 years. That suddenly really brings it home. I was trying to find out exactly where they got to. And Adam, you were hinting at that when it was because it had gone through the High Court, which found in favour of the fact that it was found unlawful, wasn't it, to have paid commissions to someone without disclosing those commissions. Didn't it? It's gone to appeal or something, isn't it? I was trying to see exactly.
I think it's waiting for a Supreme Court judgment next. And then once it's got that, certainly for the UK, I think the UK regulator will come out and release their expectation around whether a sort of a remediation or review process will be required. I suspect it probably will be in some way, shape or form. I've worked on a number of Section 166s with the regulator before, where they come out and they speak within an industry and they're quite explicit on what they're expecting to happen. And I think certainly with the car finance thing, again, we're dealing with consumers, so your regular retail customer. I suspect it'll be a relatively binary process for this, because essentially, as you said there, that the end user was not informed that a commission was going to be payable to someone for referring them to a finance house. Essentially, that's essentially what it is. And that money's probably just going to have to be returned. So I don't think it's going to be a particularly, I did one on interest rate hedging products many years ago, 2012, where the complexity of that was very different, because you're not talking retail customers, you're talking commercials, and you're talking huge sums of money in comparison. But, you're probably talking an average loan size of no more than about £15,000-20,000 for a car, maybe 25. So the commission payable on these things probably runs into the mid-hundreds, I guess. You're probably not going to get significant values. And so I'd imagine if this does go the way most people are expecting, and I hear an advert on the radio probably 6 times when I'm going to take my son to football or something, they won't be making radio adverts knowing that something's not going to work. So I think it's going to happen. But I think it then, like I said, becomes quite a binary thing where the lender will provide information to a remediation team to say, this was what we gave the broker. Has the client, or do we offer the client an opportunity to opt into this process, or are they automatically opted in? Because you can have different ways in which the clients will be assessed. And I guess it's just they'll return that with some simple interest attached to it over the period of time that it was calculated from, and the client and the retail customer will be very happy because they get a small check in his hands in a couple of months' time.
Yeah.
And I must point out that £2 billion, from what I read, is the remediation amount. That's not the operational costs.
Just going to say that. That's the point you were making, Adam, I think, wasn't it? Even the PPI numbers we found, they were just about what was paid out as a consequence of a claim, not.
And you could probably, depending on who gets involved in these programs, some of those costs will be pretty high.
Yeah.
Because if you've got certain consultancy firms that won't come cheap because of the size and nature of them, you can probably quite easily double the £2 billion of compensation to have another £2 billion of operational expense to actually make it happen.
Taking this motor finance example aside, if you look at a financial institution doing a KYC review on a corporate client, in 2023, I think it was Fenergo put a report out that said it's $2,500 per review. It costs a firm to do it due to the tech they use, the headcount they've got. That's a huge number. That's a huge figure, which can be reduced by getting on top of process and remediation and review far more quickly. So it's bonkers the amount of money that is spent.
So in terms of your proposition for that's different, or you've got your pool of experts and resources that are available in fairly short order, which is incredibly helpful for anyone who's in that jam. And I guess the other thing you keep a keen eye on is that financial cost as well.
If you put the two together, I think there, Adam, it's, cost perspective, we are competitive, way more competitive than sort of definitely large consultancy firms. We typically run significantly less, sometimes go as far to say as we're probably about 50% cheaper than most of them at the drop of a hat, without even worrying about putting a proposal together. And I think the other really important thing on the RiskPod is we can scale it up and down very, very quickly. So what I typically do with a lot of clients is we might start small. We might start with only 5 or 10 people, especially if it's a large remediation, start with 5 or 10 people, actually get a sense as to, and you guys will know this from talking to clients, sometimes you see a client and they tell you one thing, but then when you lift up the hood a little bit, it's sometimes a little bit different.
Yeah.
That's fine. I'm used to that. So what I like to do sometimes is say to the client, well, let's start a bit small. Let's do I'd almost call it like a proof of concept, but it's not, if you know what I mean. Let's start small. Let's do some work. Let's make sure all the numbers that we thought was going to be possible, all the amount of times we said how many minutes it would take to do one file, let's make sure we can actually do all that. And we may have done that before we've done the engagement anyway, but when we've got a few people in there and there's a few more questions and there's a little bit more training, there's a little bit more system work to be done, let's still make sure that happens. So, we'll start with maybe 5 or 10 people. Then we might, we've had a team of, 30, 40, 50 people with a client. We can scale it up to that point. And then once we get to a certain point and the client's comfortable and the progress is being made and they don't need that cost each day or each week, we can start scaling the team down to manage the client's costs with them as well. So, I can do that with 12 hours notice, quite frankly. If a client says, John, I've got 45 people here now, I'm sort of running out of money. I want to manage my budget a bit better. Well, we can have a conversation. Say, well, let's reduce the team then. Let's reduce the team by 30%. Let's manage your costs a little bit better. We can still work out the tail end of this project and try and get you to a point where we're going to still finish it within the time frame you need. But if it's about budget management, let's manage the budget. If it's about completion, let's complete it. So we can be very, very flexible. I mean, I guess I don't even talk anymore about the quality and the capability of the people that we've got. To me, that's just a given.
Yeah.
I don't need to concern myself with that. What I concern myself with mainly is about delivery to the client. Are we doing what we said we need to do? And are we doing it on time? Are we doing it on budget? And at the end of it, am I leaving the client in a better place? Yeah. So we always hand over to the client what we've done. We hand over notes of everything we've done, why we've done it that way, how we've done it. I mean, I've had a couple of clients ask us to train their existing team on what we did so that we can get their knowledge and experience up the scale so that actually they can do their jobs on a BAU perspective better when we leave as well. And we document all of that. So when they get new people in, it's literally like a little training manual for new people.
When you start chatting into these things, start chatting about these things, it's amazing how much the time whips past. So I'm really, really grateful for a bit of enlightenment around this, because as I say, it feels like it's topical. It's on the news all the time at the moment, and we're going to see more and more of it. But just before we finish, one of the questions we always like to invite our podcast attendees to say, I'm sure Sam will make a collage up at some point, and I didn't forewarn you on this, but if you could give your younger self a piece of advice, what would it be, with all the knowledge you've gained over the years? What piece of advice would you give yourself if you could go back and sit yourself down and have a chat?
That's a really good question.
Apart from don't go into compliance, is that?
Yeah, aside of that, do you know what? I think one of the things I've learned over the last 10 years, which I wish I had that knowledge and experience of, is being able to eloquently help and work with people that are not in the back office to help them understand why you need to do things in a way. I mean, we've all heard this phrase in the past that, there's multiple versions of these phrases, like compliance. The answer's no. Now, what's the question? That's typically what a lot of historical people think about compliance. And actually, if I was talking to my younger self, I would say, you've got to work really hard, John, to actually help the front line or the first line really understand why and how it's important to do this stuff properly and well at the beginning, because it'll save you so much time, effort, money, and energy if you do it that way around.
Yeah, that makes sense. Mark, any thoughts from you?
Mine be slightly different. I'd have told my
doesn't necessarily have to be work related.
It's not. One of them would have been not to drop economics after 3 days because I fancied a girl in drama at A level to go and do drama. That'd be one. I wish I had got on top.
She might be watching.
And the other thing would just be, everything's going to be all right. Don't worry too much about things. You keep putting one foot in front of the other, and you keep taking those steps true to yourself. Things will always work their way out in the end. And don't worry too much about the stuff that isn't going right, because when you wake up in the morning, that plan you've got won't ever look the same at the end of the day.
It's really good. Listen, nice. They're different. Well, those are different as well. We've had quite a few similar, so we'll let you know when that gets back. Listen, thanks so much for participating. We'll just round this off, and as I say, thank you for joining Mark Venslovic and John Carr, RiskPod. We're looking forward to doing more with you in the future.
Great,
thanks,
guys. Great to be on.